I typed in the market cap of Baidu, 58 billion. You compare it to the $5 billion that Sogou is aiming for. It's tiny in comparison, but it wants to get bigger. Give us a feeling of the competitive landscape right now.
Baidu is definitely by far the dominant player in the overall search engine space. But in China, there are some mobile players that are nipping at its heels. Number 2 in the market is Alibaba-backed Sinma. It has about 20% market share, whereas Baidu has about almost 50% in mobile. And then there's Sogou, which is slowly climbing. It has about 15%, 16% market share. So it still has a far ways to go, but it does have some competitive advantages. A big one is that one of its backers is Tencent. It actually merged with Tencent's online search subsidiary in 2013, which shows that Tencent is really betting on Sogou. It's going to want to make it succeed as it competes with Alibaba and Baidu in this space. And it is the only search platform that is allowed to use WeChat's public comments in its search. So that is a big deal for Sogou. And it's also making partnerships with smartphone makers to make sure that devices are shipped with its software already downloaded.
So, Michael, it feels like a turf war going on here. The big tech warriors of China, Alibaba, Tencent, Baidu, just going it out. And is this just more of a proxy war?
Well, I think it's very important that you can name all three. So that's important because it's fundamentally the understanding of the Chinese internet ecosystem. China and Russia actually look very similar, which is they've kind of, or like France, of the dirigisme of the 80s, they've kind of accidentally or on purpose chosen 3 or 4 national champion companies. Baidu, Alibaba, Tencent. Tencent's a $250 billion plus or minus market cap company that owns 40-something% of Soho, the search dog company. So they're at a definite kind of internecine war level among one another. And it's really hard to do business in China, if you're Chinese even, without doing business with one of these three. So I think that's a very, very important question. It looks a lot like Russia, which has these accidental national champions. Of course, they have to play by the rules. And of course, if they play by the rules, they get the national protection from the US companies and so forth. Yeah. The United States ecosystem works very differently, right? We have a lot of companies going up and down very fast. And the exciting thing about 17 is there's been a whole backlog of these companies curing, waiting for an IPO for 2016. In the Chinese case, there's a whole sort of a downdraft on Chinese IPO companies, Chinese market cap companies, which may be responsible for delaying the Sogou story for 2 years. We first started hearing about the Sogou IPO in 2015 of March of 15, and now 2 years later, the time might be right. On the other hand, even in the US, 2017 is very, very promising. There's so many illiquid investments that people have been waiting for 10 years for in America, waiting for these companies to cure and go IPO. We saw that happen in the late 2000s and the early 2010s, and I'm hoping we have another wave coming now. A lot of wealth can be created, a lot of realizations happen, a lot of great exits.
Selina, a lot for you to be reporting upon. And Michael mentioning there, some of the timing. Give us a reason that the timing here is important because Baidu's not swimming all that pretty in China right now.
Right, this is actually a pretty controversial time right now overall in China in the online search space. Earlier last year, there was a really big controversy. A college student had basically sought out a controversial cancer treatment among the advertisements on Baidu's search engine. And the procedure failed, and before he passed away, he penned a bunch of online posts blaming Baidu for the entire debacle. So this led to regulations that really stemmed growth in the advertising and search industry. So Baidu really suffered from this because medical ads make up a big part of its revenue, and its competitors also suffered from this as well. Although this was overall very bad for the entire industry, it also is a great entry point for Sogou to really enter the market. It's a time when public confidence in Baidu is very low, and the CEO told Bloomberg News that he's seeing a trend where people are trusting Baidu less and less, and they're turning to alternatives, and that companies that had previously exclusively partnered just with Sogou are now previously only partnered with Baidu. We're now looking for alternatives such as Sogou.
Is it significant where Sogou wants to IPO, in what market, in what exchange, and what might inform that decision? Is that
Quickly,
significant?
Selina, sorry.
Sure. Well, I mean, Baidu, I think that the U.S. IPO is big for them because it gives them a brand name. It's not as well known as Baidu or Alibaba-backed company, and I think for them it would probably be a way to gain recognition and more partners and get technology because they want to use the IPO proceeds to invest in machine learning and AI, which is very big in Silicon Valley.